All right, guys. As we were discussing earlier, we're just gonna, briefly go over market orders and price alerts. I think a lot of veterans in here, so this is probably a lot of things that you're already privy to, but we're not going to assume. So we'll just cover over the basis on it, and then maybe take a look at the charts, some ideas as far as for setting it up, and then if there's questions that anybody has, feel free. Again, the presentation is really short; it won't take long, and hopefully the questions can carry us through. And if anybody who's watching in the recordings later as well, feel free to definitely chime into the group chats with any questions that you have. I'd be more than happy to answer it. What is a market order? Well, an order is an offer sent using your broker's trading platform to open or close a transaction if the instructions specified by you are satisfied. Basically, the term order refers to how you will enter a trade. Order types: market order, an order instantly executed against a price that your broker has provided. Then there's also a pending order, which is an order to be executed at a later time at a price you specify. The types of orders are market orders, and that's typically buy or sell. So obviously on your MT4, your MT5s, the red and blue buttons that you have there, those would be obviously your buy or sell. Then of course, for those who do their trading through other platforms, via if you're doing a TradingView and you have your broker connected, then you can execute those orders there as well. So that's real time. Again, you're executing the order instantly. Then you have pending orders, and then the pending orders for buy and sell types. So let's start with the buy, which is your buy stop, and then you also have a buy limit. And then for your pending order sells, you have your, I'm sorry, I have that wrong there, but that should be your sell stop and then your sell limit, okay? Moving on. Market order. A market order is an order to buy or sell at the best available price. Your limit order is a limit order is an order placed to either buy below the market or sell above the market at a certain price. And a tip, keep in mind that slippage and connectivity issues can cause an order not to execute. So what's it look like? Well, you have your buy limit. This blue dot here is just going to represent where current price is. So when you have a buy limit order, when you're basically placing a limit to buy when the price or where the market is right here, and it physically comes to your price point. So once it comes to this green line, that's when your order would execute. Typically, your buy limit is always going to be below where the market is, a la the blue symbol. And then your sell limit order, this is going to be right here. This red tag would represent the sell limit order. And this is where current price is. So again, you're hoping for the order is the market's already moving down. You have your sell limit set here. And if price pulls back to this particular area, you're waiting for your sell limit to initiate to go to the downside. Orders to sell at or above a specific price. Again, that's what a sell limit is. For buy stops, order to buy at above a specific price. So a buy stop order would be right here. This green line would represent this. And then this would be, this blue dot, of course, would be the current market price. Once price reaches up here, you're wanting to buy, moving to the upside. Same thing applies for sell stop. Sell stop is order to sell or below a specific price. So this blue would represent where current market conditions or prices is at. And you would set your sell stop below that. Once the market reaches that price, your order will be executed and you're going to be holding that towards the downside. So another way to look at it is, remember, a buy limit is like waiting on the sidelines until a better price is filled. And then a buy or sell stops are like saying, if the train comes here, I'm joining the ride on the way up or down. Another order that we use on a regular basis typically is not thought of order, but it is inform a type of execution, and that would be your stop loss order. In order to close out if the market price reaches a specific price, which may represent a loss or profit. A stop loss order is a type of order linked to a trade for the purpose of preventing additional losses if the price goes against you. The stop loss order remains in effect until the position is liquidated or you cancel the stop loss order. And obviously, with the stop loss, that's when we assume we are wrong in the trade. No mas, por favor. We want out. Stop our actual account from bleeding at the time. Again, it's just to protect us and protect our equity. Then you have your trailing stops. Stop loss order, which is always attached to an open position and which automatically moves once profit becomes equal to or higher than a level you specify. A trailing stop loss is a type of stop loss order attached to a trade that moves as the price fluctuates. So the stop losses, I know a lot of you are familiar with, is just a set price that you're going to go ahead and get out of the market. So the trailing stop loss is once you're in a position and it's the market's at a certain point where maybe you have some profits, then you can add a trailing stop loss, which will shadow it just like in this picture. And if the market does pull back, you don't have a completely loss. It'll be based off of that. And again, with trailing stop losses, there's many ways you can execute it, whether it be through EAs like a trade manager, or if you just do it in your MT4s, or even in your trading views, you can set it and set how many pips that you would like it or points that you would like the trailing stop loss to trail your order. Really great for swing trading as well. So in conclusion, let's put this all together. There are many methods and ways to effectively use the market orders and limit orders. It depends on your goals as a trader and the strategies you have placed in your trading plan. There can be both positive and some negative trade-offs whenever placing these orders. It's your job as a trader to identify when is the best opportunity to use these orders to your benefit. Another note is that you can always back test and forward test with some of these options to see what fits you and doesn't fit your style. And alert, price alerts. Obviously, they would execute different things. Particularly, a price alert is when the market price hits a level. You would receive a notification, and again, those could be set through your MT4. You would also have a trade alert whenever an open position hits your exit orders and is closed. That's when you would receive that alert. And then the other order alert is when the entry order is filled and results in a new open position. So these are all the different types of alerts. Ultimately, whenever you do set that up via TradingView or physically set an alert through your MT4, and I'll show those when we pull the chart how to set that up for anybody that may not be privy. You'll receive these types of different notifications in the different circumstances, whether your order is executed, closed, or even if it's just a certain alert to notify you that, hey, price is in this area. Maybe I need to come to the charts and take a look. So let me see if we can pull up a chart here. All right, we'll try it on this one here. Okay. So you would go to your symbol, new order. And then, of course, for MT4s, this is normally what you would see here. So if you look here under type, well, you have your volume, the amount of lots that you're facing, of course, your stop loss, take profits, all things that we're familiar with. And you have your type. So you have your market execution, wherever the price is at. So yeah, price here. So obviously, as the market's moving, this will be fluctuating. And this is just the market orders that we're talking about. So this is straightforward. You either are selling here and the order is executed based off of the current price. And then you would have your buy market. So those are straightforward. And then once you physically select either one of these, it'll bring you to another area where you can enter in your credentials if you're as far as your take profit levels and your stop losses. But then what we're more focused on is the pending orders. So if you change that to pending order right over here, now you have your pending order type. And then this is when that would come into your effect as far as your buy limits, etc. Let me change the view really quick to a higher time frame so it's easier to see the market. Okay, love you, beautiful special case suite here. All right. So let's say the market price is right over here. We're looking at the US 30 right now as an example. Now the market conditions is closed, so I can't really execute in order. But if I was to execute an order, and I'd come here to new order, and I wanted to do let's say a pending buy limit, I would go here to the market execution type, change the pending order, I have a buy limit, and then you would have a buy limit price. So currently the price right now showing over here on the right side is at 32,350.13. Buy limit again is your buy limit. The ways those are set is just setting to buy price at a lower price. So because the market is at the 32,350, my buy limit price would have to be below that. So in this example, let's say I wanted to just buy at 3,200 even, then I could do that and place an order. Also, this here, if you ever need the expiry. So anybody who's swing trading or doing intraday trading, and you're wanting to buy at a certain level, sometimes you may, if the market isn't moving in your direction, or let's say your order was never hit, if you don't want that order to still be existing, you'd be one of two ways. Whenever you place the order, usually on the bottom here, you'll see right where you normally can view any trades that are open, and you can see how much drawdown or positive equity that you're in. You'll see the pending orders placed there whenever you place these. And if one is not executed, obviously it won't have movement, but you'll see the price of the set entry point that you put, and exit points if you had entered in those parameters on there. So on the bottom of the screen, usually where you can manage your trades, you can always right click it or hit the X to close out the pending order if you don't want the order no longer there. Or you can come here and put an expiry, and then you have a calendar. And let's say if you only wanted it valid for the week, you can go into the week or whenever that you want it to expire, and then have it execute. So once it reaches this time and date, then if the order was never initiated, then it will automatically just close the order out on its own. So yeah, it's not gonna let me do it here, but if the market was open and I put that buy limit, I could go ahead and have that place. And then also be able to add the stop loss and the take profit levels as well. And I'm gonna go back, and we'll go back to a new order. And then pending orders. And then it's the same thing. Sell limit, it'll change here to the red for the sell. Same thing, you would put your price. So obviously for a sell limit and the market, you're looking to sell and you're placing your sell limits above price. So wherever price is here, that means, let's say if I wanted this to be my next point right here, where this order block is, and that's at 32818.60. Then because the market is below there, the current price again is right over here on the right at 32,350. So then I would have to go here and enter in my sell limit order at a higher price. So the 32,818. And then of course you can go ahead and place the order. Again, we won't have an example of being able to do that since the market is currently closed. And then the same thing for the buy stop. So the buy stop, basically you will put that above here, anywhere above where set price is. And once you put that actual price in, when the market reaches it, it's gonna go, automatically initiate at that position, whichever position that you're in. Okay. Any questions? All right. And then the same thing with the sell stop. The market is coming downward and you want to be part of the price. So the sell stop, you're going to go ahead and place your sell stop order anywhere down here. And once market reaches this price, it'll execute and you're in along for the ride for the sell on the downward path. All right. Some other ways that you can actually execute these orders a little bit faster, more efficient, is you can right click on anywhere on your screen in MT4 or MT5. You go to trading and then you have it right here. So you have your sell limits. So again, when you put that sell limit, you would want to have that above where the market price is, not below. And when the market pulls back to that sell limit, that's when the order will be executed and you'll be going on the downside. Then you would have your buy limit as well. Again, that would be placed below where the market is. And once it reaches that point and pulls back, then that's when the order will be executed to the upside. Now, for the alerts as well. So the alerts, that's another interesting one here. So whenever you place an alert physically in the market, I don't know if it's gonna, looks like it's not gonna allow me to do it, but basically wherever this cursor is here, let's say I want to get in a buy, but I typically don't want to do a sell limit or a buy limit order or whatever the case may be, or a buy stop. So let's say if price reaches here, I'm interested and I may want to buy, but I want to buy and execute the order at my own accord. You can basically bring your mouse to wherever your interest is, right click, and then you would go to your trading, and then you would go to an alert, and then see right here, notice where I right clicked right here, and this is where it will alert me. So when you set up those alerts on the MT4, and I'll show you where you'd be able to go in and set that up for anybody that needs to set that up in the future. I'll receive a notification on my mobile phone, and the same can be done in TradingView if you set up an alert that way, and that can come either through your mobile phone, email, as a SMS or a text or email, whichever your choice is. And that will let you know, hey, so I don't have to sit at the computers, that there's price in my area. Let me go to the charts and see what's going on and see if there's opportunity for me to execute an order. And then the same here for the buy stops, for the trading, sell stops, sell limits, all of those are there. Or you can just go to new order, and then you can select the type of execution that you physically want. All right, so how to set up the alerts. I believe the alerts here on your MT4, you would go into your tools. Then you would go to options. Then it's gonna bring a whole bunch of options here. But you'd wanna go to your notifications, and then you'd wanna click here, enable push notifications, and you can toggle what your preferences are if you wanna notify of trade transactions. And then they have your MetaQuotes ID. Here they give you the information on how you would enter it or set it up. So this is when you would go to your phone on your MT4. Such notifications, so to let's say enter your MetaQuotes ID and you will receive notifications from MetaQuotes servers on your mobile device, iPhone or Android. Such notifications are delivered instantly, are never lost, and arrive directly to your mobile in a terminal installed on your device. Okay, so when you come here and, like, for example, if you're on an iPhone, when you go into MetaTrader 4, you go into settings. There's a settings icon that you can click on the bottom of that screen. Then on that settings, I believe you would go into messages, and then you would see something similar to this. So it'd be an ID, some sort of number that's specific to you and your broker or your MetaTrader 4. You would just click that and input this information. You would send a test, and then it would send a confirmation to your phone. Once you're set up on that, with your alerts and the alert types that you have, if order is executed, if you have a price alert ever set, you will receive that notification on your phone. So you don't have to be at your laptop or your terminal, and until you receive that notification, then you can come and do your trading. So that's really great and ideal, especially if you're swing traders if you have positions or you're trading pairs that might move sometimes when you're not at the market, based off of like wherever the pair is. If it's GBP USD, sometimes it may not always be New York time. Sometimes it may be London time. So those notification comes in with prices there, then you can go on and execute. Actually, let me see if I can change this here. If this changes the view, since BTC is. So let's see. I change it to Bitcoin real quick. I want to see if it'll actually give us that other view of our orders. Let's go to new order. Let's do a pending order. No, it's not liking it. Hmm. No, it doesn't look like it's gonna let me do this. Okay. All right. Let me see if I can change this to a trading view, and then see a different viewpoint as far as placing these orders. Let's see. All right. All right. So here we are on TradingView, and setting these alerts and these orders. Excuse me. All right. So if you're setting an alert, you can simply, what I did is just right click here anywhere on your TradingView chart, and then you can go to an add alert. And then it will pull up something similar to this. And then here, there's different alert types that you can do. So crossing, that's, if price is crossing over a certain point, or um, crossing over EMA or SMA, depending on what you do. They give you a lot more options on TradingView than what you would have on MT4. So there's lots of different ways you can trigger an alert. Obviously, right here, you can set your player. So here is like when you set certain alerts, like if you use moving averages, here is you can set the alerts to notify you when there's certain activity. So there's a lot more leeway for personalization on TradingView. You can have an expiration as well for the alerts right here when the alert will expire or no longer be valid. And then you can even name your alert, and you can also come into messaging and add a message physically to your alert. Maybe a reminder that price is here, looking to buy or sell, and then obviously you'd go right to the right here where you can actually create your set alert. I don't believe it'll show it here, but also for your buy orders and sell orders, buy limits, sell limits, buy stops, buy sell stops. That could be done as well through TradingView. However, you'd have to log into your broker, um, and there's only certain brokers that are done that are supported. So let me see. I think typically, okay. Do you guys see that these different brokers?
Yeah.
Okay, perfect, perfect. Yeah, so usually on that lower right-hand corner, all I did is I expanded it. And from here on TradingView, if you use any one of these specific brokers for your trading, then you could sign in via these brokers and execute these physical orders via TradingView. Um, so that's pretty much it that I have on here for that. Let me go back to this real quick. So some of the circumstances, I guess, too, is that when can you use these orders, or when will these limit orders make sense as far as using. Let me expand this screen again. Oops, sorry, wrong one. Here. Okay, so let's make this a little bit. Go ahead. Someone was about to say something. Okay. All right. So we were talking about I think last week. Oh, I'm hearing some background. If somebody can, there's I guess mute. Thanks. All right. Okay, so we were talking about last week, with having specific points of interest physically in the markets with your supply and your demand. And then obviously this is a 4-hour chart with NAS 100. So let's say, the market conditions is here right now, and maybe you are wanting to sell because the market is in a bearish trend temporarily right now. So you have your right over here your higher low, higher low.
lower là lower high là.
Excuse me. Thank you so much. Your your lower high over here, and then another lower high, um, and then of course right over here a higher low. So you're wanting to actually get into an order itself, but you're wanting your order to execute at a certain point. So here is where you can, physically set your alert. So obviously there's some activity. You've had some rejection in this particular way, especially rejection here, here, and here. This has been a respected line of support. So maybe you could set your limit order, an alert physically right here. Or if you wanted to automatically enter an order, you could set a sell limit. So basically, the market is at a lower position here. So if you were to set your sell limit, that means you'd be placing your order anywhere here. It's just based off of where you want. So typically, a lot of people would want to do that wherever structure meets. So because this is maybe a zone area right here, people may actually set their sell limit to trigger once it hits here. So if you place a sell limit here, once price pulls back up to this area, well, it might automatically trigger. So this is the point where you would have to decide if you want to have a stop loss, and you can have your, stop loss anywhere here, here. If you're going to market structure, just depends on how long that you're trying to, go into the order before, you're proven wrong and you want the market to take you out. Also, the same way as far as for your buy stop, if you're, well, excuse me, your sell stop. If you're doing a sell stop in this particular situation and you're wanting to execute an order, maybe you think this is going to go down a little bit more and you're not worried about the pullback. So then maybe you have it once it breaks structure here, you can put your sell stop here, come in here, and then again, it would give you the option to trade and create the new order type that you want to do. And then if it was a sell stop, once oil price comes down here and it breaks this point, you'll automatically be triggered into the stop for the downward. And obviously you'd have to set your parameters and whatnot for those. Now, the typical things that would cause you not to be able to have your order triggered, again, would be sort of like slippage, or maybe if there was a internet outage and for whatever reason, if the market conditions didn't recognize. But sometimes with slippage, like let's say if there's big news or whatnot, something that happens, or even like over the weekend, if you had that pending order placed over the weekend and there was a gap, then those could be instances where your orders may not physically be triggered. So that's sort of the trade-off with those with setting a pending order, is that it may not always be executed. But the good thing is too is that it gives you affords you the opportunity to be away from your computer, so you can get an execution should that happen while you're not on the charts. Not sure any other standpoints where I could put this. I did give two examples of the sell stop and the sell limit. So the same would apply for a buy stop and buy limit. So for a buy stop, instead of where sell stop, we'd be putting the order down here to go towards the downside. On a buy stop, you'd be placing the order anywhere here, and as soon as order reaches here, would be, it would move on to the upside. And then the same with the, let me see if I can annotate here, with the buy limit. Give me 1 second. Let's see. So buy limit, you would be placing your order here. If the price comes down here, you're wanting to buy it on the upside, moving up here. And then on a buy stop, let's see. A buy stop, you would be placing your order anywhere here. And once price reaches this point, it's on to the upside. Whereas the limit, you're waiting for the order to come down here, then move up to the upside. All right, so that's all I got. I mean, all of that is pretty self-explanatory, and maybe if we look at some more examples of price action or whatnot, maybe we'll find some more instances. But any questions by anybody? Maybe things I didn't cover or.
Oma? You can.
I can't tell if anyone else is trying to talk. Is someone else trying to ask a question?
5:50, I think, so about an hour.
5:50.
Yeah.
Finish this. Give me a shot when it's nearly half an hour.
If you're not talking, can you please put on your mute, please?
Okay, so my question is for TradingView. I've got a million questions. This is really good. But I'll just start with one. On in TradingView, have you used the replay feature to test these pending executions? Like, have you gone back in time and then played with setting buy limits and sell stops and all that stuff? And if you have, how did you? Is it pretty seamless? Does it work intuitively? You know what I mean? Have you like back tested this in TradingView?
That's a really good question, Stephanie. And to be honest, I don't have an answer for you on that because I have done the back testing before in TradingView, but with my scalp and a lot of me personally, as far as my trading style, a lot of my orders are done at execution via MT4. And then with my broker, I don't have a way specifically for me and the brokers that I use where I can actually log into TradingView to do these orders. So I haven't really had an opportunity where I could actually try to initiate that via like a back test. What I have had experience before is with TradingView, and this was a while ago when I used to use that for a lot of my charts and markups. Is I did put in my alerts, and those worked very effectively. Anytime I had set an alert or whatnot, typically when that would come over, I would receive a notification on my TradingView app on my phone, and also an email. They're really good with sending an emails out, so I can know prices at a set level or whatnot. So yeah, I maybe when on yours, if you pull up your screen later, we can maybe give it a go and give it a try, see if it allows us to do that with a trade replay. But
Okay.
I don't know, in short, to answer your question.
Okay, and then I'll just ask one more question, and then I'll let someone else jump in. On the options you showed in TradingView for the alerts, one of them was for the crossover. Does it like it so it knows when you have an EMA line?
So
Do you know what I'm talking about?
yeah. When I was using the alerts before I did have like more of a customization as far as like a moving average on my screen. And I was looking at price more so from TradingView. So yeah, you can set up the different alerts. Let me see if I can remember. So let's say the crossing. Let's see.
I can also jump in and play with this later. I was just wondering. Yeah, like that.
So yeah, so I had the moving average, okay, and
You don't
then
actually have it on your chart. Am I
trying to
seeing that?
remember this. Yeah, so this is just actually in the alert. I forgot how I had set this up before because I believe you can set up like um your type of like trading styles or conditions that you use. So this says a MA, a close, 0 SMA. Let's see, value. So I can change it to smoothing line. Uh, interesting.
I think you answered the question. You don't have to have the actual moving average on your chart. It helps if you do, of course, but it will alert you if there's like if you're a crossover trader. I can't imagine why anyone would be, but if you were looking for certain crossovers to start looking for something, that's kind of cool.
Right. Yeah. Absolutely. Yeah. I think on here if we played around and a lot of times too, like what you guys could do. I haven't done it in a while via TradingView, but if you there's a lot of good tutorials out there. If you simply just went into YouTube and just put in trade alerts, creating customized alert, they'll pull up options because TradingView, that is one of the beautiful things with it is it allows a lot more customization that just simply isn't available in MetaTrader for your alerts, your positioning, notations, just having more details added to the charts, so you can have those physically set. And then this other tab here is the notifications. So this is just more so you adjusting the type of notifications, what type of push-ups, sounds, etc. you want to have that come onto your phone. And then this here, where you want it to enable to be sent via email, SMS. And then when you do it, it does it similar to MetaTrader 4. You just put in the email address, you just press get code, and then just go into your email and verify it. Verify the code, and then you should be physically set to your alerts. And then you can come in here and depending on the different strategies, things that you have set as you create those, whenever you create those alerts or those customizations, they should already be preset here. So I believe that's what it was. I just created this at some point, and then it was set as one of my presets, and obviously the pair, and then you can select what type of alert that you want for the chart that you're putting this on. And then here's the trigger. You can do it once per, only once per bar, once per close, once per the minute. So there's a lot more options that you can have as far as those alerts and how those are being set.
Awesome. Thank you.
Any other questions that we had?
This is very good, very good. Really appreciate you taking the time and to offer all this information. Of course, I'm a morning person, so I'll be really reviewing the recording, but I appreciate all of the time and effort you put into giving this. Greatly appreciated.
Yeah,
Yeah.
I echo those thoughts, Jonathan. I wasn't able to catch the very beginning, but yes, I caught a lot. There's a lot of information, great information for us as traders.
Well, that's good to hear. Happy for that. I hope this can, bring some value, for those that can use it and maybe those that are going to listen later on. And I mean, now that we had the main baselines on it, I know a lot of people this may have sounded redundant to a lot of people that are already aware of this, but hopefully it can give you some options or positions where you can use it because especially I know that was sort of what Stephanie was trying to tackle, where she can use this to our advantage. And that's part of the things with the testing and the back testing where this will work for. But one of the things that I use on a regular basis is the alerts, because sometimes things like, consolidation, which can be annoying, comes into the market, and your session may be your hour or 2 hours, and then that trader fatigue starts to hit in, or you just have something else to do. You got to do something with the kids, with the family. You got your own personal errands that you have to run. So that's when the alerts can come into a good point for you. Sometimes with these longer time frames and higher time frames, if you look at this 1 hour chart, 4 hour chart, and you look at certain things. So let's say, what's a good point here? And be annotate. So, for example, right here was a lot of consolidation. So 1, 2, 3, 4, 5, 6, 7. So that's 7 candles right there, and we already know what in a day's time. What? How many 4-hour candles do we get within a day's time? But what, 6? Is it 6?
Two in an 8-hour period. But days aren't 8 hours long, are they?
No. But anyhow, this is an awful long time for consolidation, especially if you're trading off of a 4-hour or whatnot. Daily as well would be the same thing. It would look similar, obviously. So this is where you could physically set an alert or buy stop, sell stop based off of where you want it. So let's say you were wanting to, if at this point in time, maybe you were bullish on the market, and you thought that, oh, right over here, I'm thinking of a pullback. Maybe I'm thinking that this is just a temporary downtrend, and price has been respected, before we saw this pull down right over here. So maybe I wanted to buy if the market presented an opportunity, but I was sitting through all of this and the market was doing whatever. So I could set my alert or a buy stop here, and if the market was to enter here or move up to this point, then I would have been moving it towards the upside. But at this point, that never happened. So if my buy stop was as long as it was over, this particular area, over this top part, my order would have never been executed, and then the market went down. So therefore, I didn't have to waste all this time in this consolidation, and I just never had a market execution. And then the same thing applies for the, let me erase this, go in the other opposite direction.
Jonathan, can you set, like, if I did my market analysis and the market, excuse me, was just moving sideways, kind of, sort of, and I just wasn't sure whether it could go up or down, can I set both? Like, can I set a
Oh yeah. Oh yeah. Yeah. Great question. Yeah. You'd be able to set both, because both are doing the same purpose. One is actually just triggering your trade, but you, in hindsight, would still receive an alert based off of that.
no, I mean, can I set a buy and sell pending orders? Not alerts, but like,
Oh yeah. Yeah, you sure can. You sure can. And you could set multiple ones too, depending on how many positions and how many levels you want to get in. There's no limitation as far as how many pending orders and which direction. Now, so it would probably work out if you are doing a higher time frame. That's a good thing. I usually don't advise it on the lower time frames, or at least giving you some wiggle room, because if you set an alert, let's say if you're trading the 5 minute like myself, and I set let me say I do a buy stop and I have a sell stop. If there's heavy news, or let's say the market's open, I'll use this as an example. Let's think of this chart as physically as a, let me see, annotate, put that back up here. Let's think of this chart as a 5-minute chart for the time being. And Annotate again. So let's say the market is right over here, and I want to set a sell stop. Excuse me. I set a sell stop here, and I set a buy stop. Well, it would be a little bit over here, so it'd be over here. So what can happen is that if you think of this as a 5-minute chart, so that means the price is going to move up and down on here relatively fast, especially at a open of a like New York or maybe a London session. Bring the annotate again. If I have a buy stop, Stephanie, to answer your question, or a sell stop, let's say the market opens and it comes down here first, it can trigger this sell stop, and then it could go up here if it's very volatile and it's a quick, maybe it was just grabbing some liquidity, down here in this side and then moving to the upside. So that means this order would have been set, and then I would be in drawdown, and then now the order would be, moving in this direction. And then what if it was just still a continuation of maybe a bigger or broader range of consolidation? Then I could have 2 orders triggered, and I'm stuck in this while the market is trying to figure out where it's wanting to go. Now, also though, you could still have, like, based off of however you set up the orders and what type of stop losses that you have, or trailing stop losses that you have set. Let's say if you have 2 of the pending orders, go back to annotate. So I have my sell stop here, my buy stop here. The market is here, it opens, it activates my my sell stop, and then it moves back up. And then maybe you had a stop loss put right above here. So the market comes here, this original order, assuming this order was the one that activated first. Once it comes here to that stop loss that was already done, that I had put prior to posting my pending order, then this first trade, this sell stop, would be canceled, and then now I would be activated once price reaches right over here, and that would be me moving towards the upside. And then as long as I had a good R to R ratio, better than this, then even though both orders were activated, I may have still been positive, assuming the market came all the way to my target right over here. So you can have it set both ways, but again, that's sort of one thing that you'd want to be conscious of. Make sure you have your levels of where you want to get in and get out if you set it both ways.
So, okay, makes perfect sense. Thank you.
The other thing too with what your trading style, we're talking about supply and demand, and those pending orders, is that again, let me annotate here. When you have like really strong respected levels, make that smaller. Okay, let's go to a bigger chart here. All right, so okay, so if I'm thinking that I want to actually get into another sell on this actual order, but I want a better price. So a sell limit, again, you're looking for you're waiting for a better price for the market to come to your price before it's executed. So
Right.
I'm waiting for the market to come right over here. I'm going to go ahead and have my sell limit stop here, and then I'm going to have maybe my stop loss right above, well, to prove that I'm wrong, maybe above passing the structure, make sure that I'm wrong. So this is where, I would initiate my pending order, sell limit order. And then maybe I'd be looking to take profits here. And then that's where you're hoping for at least a bigger than 1-to-1 or at least a 1-to-1 ratio. So that's where this order would be initiated on a sell limit, and then the same thing in reverse for that buy limit